Hello and welcome to a new episode of Funder 360 English. Today we are going to discuss about the pre-IPO analysis of Think and Learn Private Limited, or otherwise called as the most popular product of them, that's Byju's learning app. So many of you may be wondering why an analysis at this time, because they haven't even came out with their draft red herring prospects. Then why? The analysis has its own value when someone is working on the draft red herring prospects, mainly because of the fact that during the IPO time there will be a higher possibility of infusing a lot of hype on that particular IPO. But when that's typically a few months before, that may not happen, because as and when the date of IPO approaches, there is a higher probability of going for a bigger hype through all the online media or the offline media or everywhere. In that case, many of investors, they used to get misguided whether the numbers are factual or not. So here this is basically a SWOT analysis, and when IPO has been plotted, what exactly we are expecting from them. Already Byju went for a $800 million pre-IPO fundraising drive, and within the next 6 to 8 months it is supposed to hit on the flows of IPO. First, let's have a look on the financials. Financials doesn't mean that we are diving deep into it like any of the public companies, but the data that with me is only till 2020 June, and as per 2020 June, the PAT, profit after tax, that's recording at 132.5 million. Please note that the figures of quarter, that's in March quarter 2018, on the same time, that was 26 million only. So there was a sudden jump during that time, and they could be able to sustain that sudden jump in revenues as well as the profit on the consecutive quarters also. So the figure 135.5 million, that was the quarter ended in June 2020. So you can find that that was just the pre-COVID lockdown. That's the numbers almost, because March 2020 only the lockdown came into existence, and during that quarter many of us, we weren't think about the alternatives of online education, but still they could be able to manage a whopping number of 135 million, and they could be able to manage to generate a revenue of almost 500%. That was marvelous. It's noteworthy to mention that Byju's valuation has become almost 20 times in the last 2 to 3 years. Exactly speaking, that's in the 2.5 years, 30 months. So that also, when considered to a company, that's phenomenal. Now let's have a look on what are the strengths of the Think and Learn company, private limited company, or alternative called as Byju's. The first advantage that they can claim is they are the first in that segment. Though many of them came, but they couldn't be able to find a sustainable offering on that field. So that's a first comer advantage obviously they have. Second thing is, they could able to launch diverse product. Doesn't mean that they could able to launch, but they could able to acquire many companies that's in the diverse field on the education sector. For example, White Hat Junior. White Hat Junior they have acquired. On the other hand, White Hat Junior was dealing with the coding. That is entirely different from the conventional Byju offerings, because Byju was offering that to the school kids, to the either tuition or the audio-visual solutions or videos itself. Nothing more than that. So along with that, they have acquired White Hat Junior that offers coding solutions, Topper, much similar to that of Byju, still they have acquired. But eventually they could be able to create a portfolio of diversified product. And third point is, currently they have a very strong finance. They could be able to post better numbers. Fourth point is, they are ultimately cash rich. So this kind of acquisition spree they are conducting just because of the cash in hand. Now let's have a look on what are the weakness that exists with Byju. When we look on the numbers, the first weakness is nothing but the low return on investment, because the volume size that deployed is very big, but when it comes to ROI, that's very less. Even NPM also that relatively less when compared to any of the other edtech companies. The second weakness is Byju could be able to fetch the market in India, but unfortunately, though they have forayed into US markets, almost it's nil. They couldn't be able to fetch much of the registrations. And the third weakness they could be able to find is about the bad reviews. The retention, though they are claiming that's good, but unfortunately the bad reviews that's piling up, that's not at all good for any company, especially when they're targeting a B2C business to customer business. Now let's have a look on what are the opportunities. First and foremost opportunity is, since as an edtech, online edtech company, world is the marketplace. They could be able to expand to any place, even to the Americas, Europe, or anywhere else. So that's a primemost opportunity. And when it comes to opportunity, even company itself, they are claiming that NEP, National Education Policy 2020, that gives a better edge for Byju because NEP envisions an activity-based learning as well as non-conventional type of learning in principle. So Byju hopes that this will give a better edge for them. Another opportunity they could able to find is about they can able to launch full-fledged professional support courses, as well as by using the same software infrastructure, IT infrastructure, they can even act as a skill course provider like edX or Coursera. That also can happen. That's one another growth opportunity. Already they have acquired Akash. With that, they have forayed into the intermediate level of education, that's a +1, +2 levels of education, and to provide the entrance exam coaching. Another growth opportunity that they can look into is about the untapped rural area of India. Because as days go by, the digital divide will come down. So with that, they could be able to fetch more and more customers. Now let's have a look on the threat. That is the most important thing. Because when we think about an investor's point of view, we are much concerned about the threats, especially in the case of IPO, than any of the opportunities or simple weakness. The first and foremost threat is this is an easy to replicate business model. Anyone can start a business like this. Even no bigger investment is also not needed. If you have 50,000 rupees, 1 lakh rupees, the IT infrastructure nowadays it's very cheap. The only question is whether you can able to fetch the customers, whether you can able to convince your customers and get into your groove. So that's an easy to replicate business model. That's a potential threat number one. Second thing is, just like Europe, India is also going for stricter norms on data privacy. That means when the company collects data of the students, the privacy part makes a vital role there. If any lapse happens, there is a higher probability that will invite the regulators or government's action against you. Another threat that you can find is about the diminishing of FOMO factor. We know that when education comes, especially in the case of Byju's, they are creating their business strategies mainly depends on FOMO factor, fear of missing out. How they are fetching the majority of the customers, they are fetching majority of the customers through advertisements. Or even some cases we have personally experienced that they go to the schools and they conduct some online examinations or offline examinations over there, and they could able to get the parents' details, and with the examination results they will canvass the parents. Majority of the time the result may not be that much good. With that, they will canvass the parents that your student is not up to the mark when compared to their peers. That means when compared to the global comparison with India or other states, your student is not up to the mark. So if your student is not up to the mark, when he or she grows up, how could he be able to compete with others in certain exams like NEET or JEE or IAS or UPSC exams? So the competency of your kid should be improved. Thus starts the FOMO, fear of missing out. So majority of the parents think that my kid also need to improve just like others. My student also able to compete with others. So though they don't have the money to pay for Byju's, subscribe for Byju's, they will even borrow money from someone else and join. Now the question is, how long a business can run with this FOMO factor? No, it won't. After a cycle, this FOMO will go, because word of mouth says this FOMO doesn't exist, or in some cases the parents already subscribed. They won't give a good remarks. It's a fact that in education, FOMO will not work out in a sustainable way. So that will eventually make adverse impact on the business model of Byju. Another threat is the emergence of free resources. We know that Byju resources, that's of better quality, no doubt about it. But unfortunately, we could able to find that many private vendors as well as even government may also come out with digital resources for free. Even Khan's Academy or 101 videos you can find. Better explanation, better concept-wise explanation, or even you can find paid videos also. That's much good, much better, but that is cheaper. So emergence of these kind of cheaper or free multimedia resources that pose sustainable threat to the Byju's business model. Another threat is about the unethical marketing as well as the sales strategies. Another threat is nothing but the unethical marketing or sales strategies. Already BBC has reported that in Byju's, majority of the sales personnel, they are experiencing immense pressure from their superiors. So when pressure mounts up, there is higher probability that the sales people, they will go for some unethical practices to find their clients. Personal ethics, that may be ruined. They may give some false promises to their clients and somehow they need to pick up the clients and show the deal value. For the salespeople, that may be sufficient enough. But when a salesperson give a false promise in the name of Byju, that moment they could be able to fetch a client, but that makes a negative impact on the brand. So next time, or there won't be any sustainable business happens there. The goodwill of the company will spoil. Another threat is about the ad-driven customer acquisition. Neither Byju nor any of the business websites, they have been released the acquisition cost for Byju for a customer. Average acquisition cost per customer, that's an important thing when it comes to internet business. We know the business model of Paytm or Zomato or all those things. The key matrix, key parameter that you have to consider is about the average cost of acquisition per customer, per subscriber. That we don't know how much it is. But the only thing we know though is the hardcore, expensive advertisements that's running in all the media. That's the one and only source to get majority of the revenue. Now the question is how long they can survive with this kind of aggressive marketing strategy. That's also another potential threat. Threat number 5 is, we know that the CBSE or ICSE or even state board schools also, they came out with a lot of guidelines regarding the private parties' entry into the schools. They can't theoretically able to conduct any of the entrance exams or any of the screening exams or any of the scholarship exams in the school premises. So the data source from the schools in the name of entrance exams or scholarship exam, that has been stopped. So sourcing a prospective client database has been ceased there itself. Seventh threat is the predictability. Just like MLM people, multi-level marketing people. You know about multi-level marketing people, right? They canvas you in a better way. But unfortunately, the problem is, if you see 100 multi-level people who are canvassing you, the scripts they are using remains the same. They are trying to exploit you, the FOMO factor. They will tell you that you are missing out the opportunity. They will tell you that if you are not joining today, your life will be spoiled. So that's a predictability. So when a sales pitch becomes predictable in nature, there lose your customers. When a Byju salesperson approaches you, you know what he is going to tell you. So majority of the time, the client will vanish from that site. So the Byju people, when they become like multi-level marketing people, when their canvassing strategy become like multi-level marketing people, most probably that strategy will not work with the mass. Threat number 9 is nothing but NEP 2020. National Education Policy 2020. So NEP 2020, we have discussed that about the growth opportunity. At the same time, what we can't overrule is NEP 2020 envisioning an activity-based learning scenario. So majority of the time, the online learning or the passive type of learning or remote learning things may be taken out from the school scenario. In that case, we can't think that NEP 2020 will enable the Byju type applications or companies to get it flourished. Another thought that's generally going on is with the issues related to the EMIs. We know that the Byju, that subscription that maybe even costs a few thousands. So in that case, if the salesperson is pitching the same thing to someone who is in the lower middle class family or even less, what happens? They can't be able to pay that fee. There comes the EMI model. A finance company that's associated with Byju, they will provide the fee as an EMI. Then what happens? Just like any of the NBFC, non-banking financial company, they will try to extract money from the client. If the client is unable to pay it, the unethical or unfair means to extort money from the clients also will start. Ultimately, the bad name goes to Byju. When NBFC tried to extort money from the customer also, the name goes to Byju. There starts the deterioration of Byju's goodwill. Many settlements we have seen with Byju when the issue came into public. Some of the parents, they are menials. Still, they have taken the subscription for their kids just because of that creates some FOMO effect. But they are unable to pay the subsequent EMIs. So what happened? NBFCs, the company, the recovery agents start to harass the parents. That got media attention and ultimately Byju had to write off the dues. So image has been tarnished, revenues are impacted. Another key thing is about the higher attrition of employees in Byju, even much higher than the software companies. That's beyond our imagination. The attrition is very high, maybe just because of the fact that the work culture as well as the supervisor's pressure may be immense. Whatever it is, this creates a very bad impression on the company in long run. So in short, what you can read from this as an investor? As an investor, better you stay away from this IPO because in short term, this is not going to yield much of the benefits to you. In fact, the promoters may exit completely from the company itself, just like Zomato. So that's all for now. See you in the next episode. Till then, bye from Anup.